COVID-19 period, society recognizes that the investment institutions plays an important role in solving social and environmental issues. As China's economy slowly regains its momentum, more and more investors are starting to seek financial returns and social returns at the same time. Referring to GIIN, impact investment is the investment intended to create positive impacts beyond financial return. In the past 5 years, the market is growing at 25% per year in the world. As one of the world's growing market, China has enormous potential. In Chinese Youth Cloud Summit, we will focus on the future of impact investment in China and some of the barriers and solutions in China's market. Good morning and good evening to our audience around the globe. My name is Nicky McCollum, and I'm the president of the Chinese Youth Cloud Summit. It is my honor to welcome the experts from world's top investment and academic institutions on behalf of our community. First, I would like to introduce today's monitor, Jing Huang, and hand over the mic to him. Jing Huang is currently preparing an impact investment fund in China. He was the partner of TPG. Before TPG, Jing was managing director at Bain Capital. He was also the managing director of SoftBank Asia Infrastructure Fund. Thank you.
Thank you, Nikki. Hi, everyone, and good morning for people in China and good evening for people in North America. I know that a lot of you are Chinese students studying in US institutions, but currently many of you are back in China. So good morning and good evening at the same time to all of you. Let me just add one very proud job that I have had for the past 6 years. I was managing executive director of Harvard Center Shanghai, which is Harvard University's official organizations in Asia Pacific. So I was a HBS, a Harvard Business School graduate, and then I was back at the school and helping Harvard in Asia Pacific. So I was very proud of that. So I would like to add that. Now, the charitable actions are very noble. There are many social problems in the world, and charitable people and governments are really mandated to solve social problems. But in recent years, we have another group of people who are typically associated with greed and some bad associations, which are investors, capitalists, but they are also solving social problems. So I'm very curious about this particular phenomenon. So today, we are very lucky to have people, across on both sides of the Pacific, to explain why this is possible for people of money, also in the same pursuit of solving social problems. So first, I would like to invite each of our panelists today to have a short introduction of not more than, let's say, 1 minute. So maybe we could start with Professor Vikram Gandhi. Professor, you are muted.
Yeah, thank you. Thank you so much, Jing. Thank you for having me here. My name is Vikram Gandhi. I'm a professor at the Harvard Business School, and I have developed a course over the last 5 years, which is called Investing, Risk, Return, and Impact. And the whole focus of the course is that investing does not necessarily just need to be about risk and return, but we need to bring in impact into the whole equation. And as Jing just said, that there's an enormous opportunity to actually generate financial returns, income, create wealth, but at the same time, really address important societal problems. And so what we are trying to do is really bring those two things together. And I think there's a massive opportunity in China to do this. And I look forward to exploring that further over the course of this 90 minutes.
Great. So Sharon Yang, could you be the next to introduce yourself, and then Sharon Shen.
Hi, and thank you for having me today. My name is Sharon Yang. I'm a member of the global investment team for our Global Impact Fund, and we are of KKR. We are a relatively newer part of the KKR family suite of strategies, but as Professor Gandhi has mentioned, we really believe that combining financial returns with social impact is something that is not only feasible, but also a mission of our fund to really drive societal change. And what we're trying to do is combining and focusing on the UN Sustainable Development goals and looking at a number of key issues, whether it be climate change, workforce development, or even waste management across the globe, and seek to address these by investing and partnering with businesses, primarily in the lower middle market space in US and Europe, and increasingly in the late stage growth space within Asia. And so with that, really look forward to sharing more with all of you.
Thank you. Sharon Shen, please, from TPG Rise Fund.
Hey, good morning and good evening, everyone. So thanks for Professor GIIN to have me here. And my name is Sharon Shen, that I joined TPG since 2018. And we have been kind of launched the first kind of like real global impact investing fund, so called TPG Rise, since 2017. And right now that we're already at our second fund. So overall, that like echoing like a lot of the things that Sharon and again Professor Gandhi were saying, that we are strong believer of like social impact and creating goods can be going in line with sustainable kind of financial return as well. In the way that Rise is a strong believer of having sustainable and measurable social impact, in a way that we want to kind of embrace the independent and the measurable impact that we and our portfolio can bring to the society. That's kind of mission that we're embracing here. So great to meet all of you, and looking forward to share more in the following session.
Great. And Kevin Tong of Pili Ventures.
Hello, everyone. Good evening, good morning. And thanks, Mr. GIIN, to having me here. I'm Kevin Tong. I'm from Pili Ventures. I'm doing the early stage investment in the VC fund. And we do a few impact investment along the year. And I think we are looking for the positive impacts, create positive impacts beyond financial return in terms of the impact investing. I will share more later. So nice to meet you all. Thanks.
Great. So now we have all the panelists to get to know, to let you get to know them a little bit. So I would like to probably direct our discussion into several aspects, and hopefully we will be interactive rather than to give you mini lectures. And also, I'm sure it'll be informative and also hopefully interesting to you as well. So first, probably let me turn to Professor Gandhi. Now, if someone who doesn't really know investment and doesn't know our field, how would you explain to them at a dinner table, what is it? What is impact investing?
Okay, that's a great question, GIIN. So thank you for asking me, because I have been at many dinner tables and I've had the opportunity to explain it. I've had sometimes when you explain it after a few glasses of wine, it may be a little easier, but that's okay. I'll still give it a little chance right now. So I think the way to think about this is to step back and say, what are the broader goals of society at large? And one of the things that has become a Northern Star, or like a focus and a mission for the world, is to, is to think about these UN sustainable goals. And there are 17 UN sustainable goals, and that basically it requires about $5 to $7 trillion a year. And there's only about half of that can be really funded by governments and by charity and philanthropy. So there's a big chunk, and Sharon Yang from KKR mentioned this, there's a big chunk of investment that needs to come from the private side. That private capital needs to be co-opted to actually focus on helping achieve these sustainable goals. And private capital could say, well, we don't really care. But the fact of the matter is that to operate in this world, you actually need to care. So that's one. The second is that a big chunk of the younger population, and we call the millennials in the US or Gen Z, anyone who is basically 35 years and younger, that there's a big push that, hey, look, we want to earn money, we want to kind of be wealthy, we want to have a good education, we want to do good things, but at the same time, we want to actually make a difference to the world. And that is a big mindset shift compared to, say, when Jing, you and I are what we call baby boomers. And we've done a study at Harvard which basically says that maybe 25% of baby boomers care about impact, etc. But when you go down to millennials and Gen Z, that number goes all the way to 60, 70, 80%. So the younger people just care a lot more about it. So these are the two forces that are really driving this. And so when I talk about impact investing, is that how do we bring in private capital to generate a return, just like you would in any other investment, but at the same time, try and address these societal problems, which in one framework is the UN Sustainable Goals. And so the way to think about this is pretty straightforward, which is that, first of all, it's investing. People kind of, when we talk about impact investing, sometimes people forget about the fact that this is investing. In fact, the course that we teach at Harvard is a finance investing course. It's about returns, it's about measuring risk, but then you add a third dimension, which is impact. And what does that mean? That means that you are bringing in impact metrics, impact analysis at the time of the due diligence, when you make the investment. It's an investment lens that you use. And then once you actually make the investment, just like you have financial metrics that you measure, there are impact metrics that you measure. So basically, impact investing in my mind is it's investing with the intent to generate not just financial return, but some sort of environmental, social, and governance return. And okay. The key question is the intent. That it's not just about making an investment and saying this is what I make, but it's an intent.
Right. So I probably would ask other panelists, because I think Sharon Yang mentioned also the UN goals. Could someone, maybe Sharon, you could say, what are some areas that your funds are operating in? Just give me the areas so that people can know the UN goals, just for those who are not familiar with those. So maybe, so who wants to give us some examples of the sub industries that you're operating in?
Do you want to go ahead?
Sure, I'm happy to. I think as professors mentioned, there are 17 goals which are predominantly developed with a public policy focus initially, but increasingly, especially over the last few years with the emergence of impact funds, the UN has also been working very closely with the private sector in establishing more frameworks for how the goals themselves can be adapted in a private setting, in a private investment setting. So I think a few of the areas that, just as an example from the Global Impact Fund, we've been addressing, one is really around climate change. So this is a very obvious one. Number 13 is climate action. Number 14 is life on land, and life underwater, 15. So I think there's a number of environmental related examples that we can raise, which I can discuss later on in some of the follow-on topics on the deals that we've done. Another area that, at least for KKR Impact, we've been very focused on is around education and workforce development. And so this is really addressing number 4, which is quality education. Obviously, there was 17, of which there are many others that are covered, but I think these are the two big focus, one on the environmental and sustainability side, the other on the social and development side. And we do look at these verticals in a separate manner and to try to address them as a distinct issue. Maybe I'll pause there.
So Sharon, do you have additional areas that you address other than what KKR Global does? She mentioned environmental and education. So what about your fund? Any other areas that you're working in?
First, I'm assuming you're asking me, right? So
yeah, Sharon Shen. so I noticed both of you are named Sharon. So it's so I have to address well maybe it's interesting. So if you're a lady and then if you're named Sharon, then you probably are likely to work in the impact investment side. But anyway, so Sharon Shen, please, TBG Rise. What areas that you are working in? Yeah.
So apart from the area like education and also environmental sustainability, that the additional area that we're also putting a lot of focus is healthcare as well as inclusive finance. As a matter of fact, that a big part of our RISE portfolio in China today is focused on inclusive financing part. Well, many others may think that China has already passed the stage on being like arguably the developing or developed world, but still that there's a big need to close the gaps in terms of the income inequality.
Okay, great. All right. So Pili Ventures, you're in the early stage, and so you have heard what the big, large, the largest global PE funds, they're operating in those areas. So what areas are you working in, Kevin?
Yes, we actually are focusing on the healthcare part, especially mental disease, and also some kind of very maybe you haven't heard of it, like speech delay problems. In those areas, we are looking into the investment opportunity.
Okay, so people's well-being. That's wonderful, including psychological, the well-being. All right. So so Sharon Shen, you mentioned that in your introduction that you measurable social return. Could you explain through that? Because Professor also mentioned this. Intent is very important, but how would you measure the social values that you have created?
Yeah, so being measurable and creating like independent measurable result impact as in the mission of RISE from day one. So it's in our belief that it will be only if it's measurable and it's independent, then this is how that we can set up the boundary and also discipline in terms of measuring and also underwriting on the impact front. Because obviously this is a topic that's been attracting a lot of attention and with increasing awareness, as the professor has pointed out. But still that if there's no boundary, then there's no clearly defined differentiator in a way that both for the LP society and as well as for the entrepreneur society, because we believe that this is a mission that will be best achieved through the people who actually deeply embrace it in a way that it attracts both the investor as well as the like-minded entrepreneur to share that mission and share the action.
Yeah.
So one thing, Professor, about this measurable, and Sharon mentioned independent. So in the market, have you seen like third-party consultants really help the PE funds and investors to measure what social values they have created? Or how would you teach
Yeah,
in
yes,
your class, how to
that's
measure.
exactly right. So as just to build on what Sharon Shen just said in terms of TPG Rise, I've written a case actually on TPG Rise.
Oh, wonderful.
And so we have a case and we teach it in our class, and it's basically this thing called the impact multiple of money. And in fact, the case is around the first investment that TPG Rise did, which was in a company called Everfi, which is a SaaS software company, which basically provides software to educate students going to college and university on dealing with alcohol abuse, sexual harassment, and a whole bunch of other things. And so there's that piece. And then the other piece that they did was on financial inclusion. And so the whole business model was to create educational aspects on reducing alcohol abuse, creating awareness of sexual harassment. So there's a reduction in that. And the other aspect was for the poorer populations to increase financial inclusion. And what they have is an impact multiple of money. It's a mechanism which basically tries to do exactly what you do on the financial analysis of IRR and NPV and everything else, is that you create some financial metrics on impact, and they use different studies and all that. So, and basically they use a company called Bridgespan, which is a consulting firm that helps them think through this. But then, what I would commend TPG Rise on is that they've set up this nonprofit called Y Analytics, which actually is trying to advance the whole issue of impact measurement. And then the third piece, to your point, is that they've actually engaged KPMG and a bunch of other auditors to kind of analyze whether this impact is actually happening. So the thing, though, is that in my mind, it's all great, but only the big funds can actually afford to do all this, and they can actually pay for all this. And so in my mind, and I've talked to all the big funds about this, is that how do the smaller funds and the more entrepreneurial funds who can't hire consultants and accountants and all this to do all these things, how can they think about impact investing? And I think that's something that we need to kind of explore a little bit more going forward.
Yeah, okay. So which means from your description, also Sharon Shen's description, the whole area of measurement could be a ecosystem partners that includes impact consulting and impact auditing, and probably there are also tiers. So there are Bridgespan, which is probably McKinsey of the the impact consulting. But there need to be other ways so that small funds could also have the third-party independent auditing. So that's something the work to be done. But this creating ecosystem is important. So you mentioned it's great for whenever we talk to a HBS professor, they always have very interesting cases, and so I would like to probably have each of the funds, KKR, TPG, and Peely, to share with the audience one deal that you have done, not necessarily in Asia, but whatever deal you are able to talk about publicly, to thousands of audience today, about a specific thing that you have done. So we can get a sense. It's more like go to HBS and you imagine there is a real situation. So maybe let's start with Peely. You are in the early stage. So what would you see? I mean, what you have done that you can share with us? You mentioned mental health. So is that something that you did, or you're talking about in general?
Today I'm gonna share like speech delay cases we have done last year.
Okay. Speech delay. So for kids, for like kids, they could not speak. Okay.
Right. Could not properly.
Okay. Please.
Right. Yeah. This is actually a very interesting area that I have no idea at all until I met the founder last year. So I didn't know that there were 13 million people in China had speech delay problem because of the hearing problems or the oral cavity problems. And, but however, there are very few professional service providers for the speech recovery, less than 10,000 speech trainers. So if the patient is not treated properly in his or her childhood, he or she will not get chance to recover his speech ability as normal people forever. So, and more interesting thing is that nowadays, I think I visit children's hospital 1 year ago, and I found many children are visiting the speech delay department in the hospital. I asked the doctors why there are so many children here. He told me that those children spend too much time on iPad, iPhone at home, so they got very few opportunities.
So
to
technology. So they develop their visual ability much more than their speech ability. Yeah.
Right.
Okay.
Right. And I found this is a big area to improve in China. So we invested this founder. The founder actually was leading a program helping children who has speech problem in an NGO organization before. So, but she found
so the founder. So the founder started as a charity organization.
Right.
Is that right? Okay.
Right. Beginning. Right. She. I think had been doing that for like 2 years. However, she found out that she can help more people if she can do it as his own business. So that's why we met and we talked. We think it's a very great opportunity for us to do this impact investing.
Okay, great. So after your investment, is the business developed well, and so what is the size of their business right now? Yeah.
They have opened up like three offline clinics in Shanghai, in Hangzhou, in Nanjing. So the business is going well, but it took time for them to ramp up. And I think they have create a very innovative way to increase the number of speech trainers by they have.
And so were you the first money in? Were you like the angel
yes.
in the angel stage, or you're okay.
Yeah, we call it seed stage. It's actually a seed stage.
Seed stage. Well, congratulations. Yeah, I think that I certainly know people, our friends who have the kids at the age of 3 and still could not say a word. So I think that I'm surprised that there are so many of them. Now, here's a question. Now, Professor Gandhi, when you hear this, I want to ask in terms of, because Sharon Shen also mentioned healthcare. So there are commercial capital investing in healthcare as well. So after you're hearing this particular case, what will make them impact investing rather than a normal angel investing?
Oh, exactly right. So that's a great question. So I think the way to think about it is that, first of all, since the example that Kevin gave, it was an NGO, and I want to make sure that people understand that this is impact investing is not necessarily an alternative to NGOs. It's just another form of trying to tackle social issues. I think it's not an either or. I think there's a role for NGOs, there's a role for government spending, and there's a role for private kind of commercial capital. So that's one. Second is that I think and in fact, when Kevin started talking about this, I exactly had the same thought. Like, okay, so why is this impact investing? I mean, if there are a lot of students who are, or children who have this deficiency, it's a business opportunity for a healthcare company, and they're going to deal with it. And I think the difference comes really in terms of what I find, particularly in emerging markets, is that what is the target population that you're going after to solve this problem? So if it's a wealthy Chinese people who can pay and just do it, then I'm not sure that's impact investing, right? Because I mean, they can afford to do it. But it's really kind of coming up with a business model that targets people who are a little below that kind of wealthy population, who actually are willing to pay, but may not be able to pay that much. And so therefore you actually adjust your business model to deliver a service for that kind of client base at a price point that makes sense for that particular customer. And not just healthcare, it could be education, it could be financial services, it could be anything. And you develop a business model where your cost structure deals with that so that you can earn a cost of capital as well. So in emerging markets, to a large extent, it's really dealing with not the true bottom of the pyramid, not the true wealthy, but it's like the middle kind of population. And there's a huge business opportunity there. So think of impact investing as a massive business opportunity in that bucket.
Okay, great. So Sharon, do you have some comment or question for Kevin on his little mini case?
No, I think that all makes sense. And also from Professor Gandhi's point, I think a lot of, we personally don't do healthcare. So KKR Global Impact at the moment, we actually view healthcare as relatively separate for exactly those reasons, because we do have a separate healthcare investment vehicle. But I think some of the challenges that we're facing are similar in the sense of, for example, in private education, the framework that we're really trying to address these are, if you're going after a high-end private school versus something that's more addressing a disadvantaged population. And so looking at it through the framework of not only efficacy for education, but also the affordability aspect and the access aspect, and whether these all three pillars can sustain a case, which I'm sure it sounds like it's a similar dialogue within the healthcare space as well.
Right. Okay. Sharon, Shen, any question or comment?
No, not really question per se, but yeah, just I can't agree more on Professor Gandhi's point. It's that it's not either or questions. To us, it's a both and questions. So for us, like any investment, it's similar that it has to be making sense from any TPG investment perspective, from the return perspective. But still, this having the impact fund focusing on this is a conscious effort that we're putting our emphasis and we're putting our effort in order to support those commercially make sense projects to be the catalyst to join the mission, like the initiative that Calvin has mentioned.
So, Jing, if could I say something on this, if you don't mind?
Sure, please.
So I think, the issue from my perspective when I'm kind of teaching this course and thinking about the framework. So when you talk about TPG Rise, KKR, Kevin Tang's fund, they're all targeting market-based returns, right? I mean, they're not like sacrificing returns. And that's a great thing. So if you can actually not sacrifice returns and have impact at the same time, that's fantastic. And I would kind of put those as, the business model is collinear, et cetera. But there's actually a huge opportunity also, and I don't think any of the other panelists will that's just not what they do, but there's a huge kind of aspect where it's not philanthropy, it's not market-based returns, but it's actually having business models where you actually, you're not getting the market-based return, but you're actually maybe having a lot more impact than you would otherwise. And I think that's a whole other area which people need to think about, which is, and typically you can't do this with third-party money. It's got to be your own family money or things where you can actually say that, hey, I can sacrifice return, but I'm going to have more impact.
Right.
But I just want to make sure that's a big area of impact investing that we should miss out.
Right. So Professor, can we dig a little bit deeper on this? Because these are the funds, these are GPs, right? There's fund managers, but behind them, there are LPs, which are, in fund management terms, of limited partners, which are the capital providers.
Yeah.
So what you're saying is that there are some capital providers who look for a total return, but a large portion is social return. So therefore, they could accept below the market financial return, but their total return, their requirement is still pretty high, but they just shifting the portion a little bit. So that's a very interesting concept. But I don't think those are the funds investing in KKR and TPG, because those funds, those LPs are very commercially oriented. So they're not looking for, right? So what I'm talking about is in other funds, you could set up a fund which actually says, I'm going to be having below market returns, but I'm going to have massively more impact. And the investors in those funds
would typically be big family offices. You know, if I have a family office and I say I could do charity, just to the point that Kevin raised, there was an NGO doing charity on certain thing, but decided, hey, right, if I turn to a business model, I can have more impact. So rather than doing charity, I'll invest in some companies where I may not generate a full return, but I have, so family offices, development financial institutions, I would argue a lot of governments are starting to do that too, where they say, hey, rather than doing the development financing directly, I'll invest in some companies where, you know, I could maybe have more sustainability and scalability. But I don't think we're talking about the LP investing in KKR or TPG.
Right. So in other words, those are institutions like family offices and charitable foundations. They are mandated to do good things, right? To do good is their goal. But if they do a sustainable investing, a sustainable business model, then they could have recurring capital to do more. However, the seeking financial return is actually not the most important thing. So that's a very interesting. Maybe Kevin, you have a very interesting LP base. Your anchor LP is a foundation, right? I mean, could you tell a little bit about Tao Foundation? Yeah.
Sure. As Mr. GIIN said, Pili's anchor LP is Tao Foundation. Actually, is also the donors for the HBS, right? And the Tao Foundation basically doing the charity things. There are two parts. One part is do the pure charity to sponsor the poor students who cannot afford for the tuition fee in China, and the second part he founded the Pili, right? So he wanted to do the Pili's earnings. He wanted to do more charity via Pili's earnings. So that's it's an ecosystem, actually, I would like to say.
Yeah, so that's very interesting that the professor just points out that there are some foundations that they could actually have a generating cash flow to do the thing. The Tao Foundation, just for those of you who are unfamiliar with, sponsored thousands of poor students from rural China to sponsor them 4 years of college tuition to study in college. Otherwise, these families are gonna have a huge debt, or they just cannot afford to go to college in China. So they are doing something very, very interesting. Okay, well, let's have Sharon Yang to share a recent portfolio company story and tell us what do you intend? The professor said intent is very important. What intent that you create a social value? Sharon Yang, please.
Sure. So I think from a the intent is the starting point, right? So without the intent, we wouldn't even be here. But as both professor and everyone has aligned, there is also, you need to both be measurable and quantifiable in the entire life cycle, right? Defining your impact, measuring your impact, committing to that, and then monitoring going forward. And also, I think an additional aspect from our end is that we need to commit to driving change as well. So we do have ESG agendas as part of our investment. We do need to have influence as part of every deal that we do. We want governance in order to drive both financial decision as well as impact and ESG decisions. And we also commit to things like inclusion and diversity for every portfolio company that we have. So it is from the pre-investment, from the identification, I think a lot of us has focused on how do you define it and how do you measure it, but also it's through the life cycle of the investment itself. And private equity right now is a very small sliver of global asset management. So even if you forget about impact investing, we're impact within private equity. Private equity is a, several $1 trillion market, but that's, by far less than 10% of total asset allocation when you look at the whole market landscape. And many of our investors, as earlier flagged, would be public pension funds, large funds that would have, government institutions, et cetera, that would have very defined asset allocation targets. And so what we're looking at is addressing and complementing the pool of additional capital with an intentionality and through a measured and quantifiable approach.
Right. So Sharon Yang, could you share with us one particular investment that your fund has done?
Sure, and we've done now 9 investments globally, and even though our fund has just been about 2 years since its launch, I'll speak on the most recent one that we've closed on in Asia, which was closed in July this year in Australia. Actually, it's a company called GIIN. It's actually one of Australia's leading carbon markets provider. They actually work and partner with landowners within Australia to really look at the carbon measurement and generate carbon credits. And so carbon credits today are within Australia, each carbon credit called the ACU, Australian Carbon Credit Unit, essentially equates to 1 ton of CO2 abatement. And so it's extremely measurable in that what they do, they are today by far the largest and most dominant player within the carbon markets in Australia. And Australia actually is very interesting in that they have an emissions reduction fund, the ERF, which has committed, over 4 billion Aussie to really support and underwrite these credits themselves. So it's long dated. It's a market that today is still primarily focused on the compliance market, so supplying to the government to really meet Australia's long-term UN Paris Agreement goals of 2% Celsius reductions, and obviously the climate commitments that Australia as a nation has made. But in addition, there is, from our perspective, a ton of opportunity to really think about whether it's corporate, whether it's retail, whether it's international, and really expanding the business to go forward. We see a number of different avenues that would be really interesting. And obviously, even within the domestic Australian context, right now, the business primarily focuses on carbon. We're actively looking at water as well, and the Great Barrier Reef, and figuring out methodologies that would really address sustainable change and measurable change, but generating that in a quantifiable manner with financial returns.
Great. So Sharon Yang, does your portfolio company in Australia does both carbon and water exchange? I mean, the water credit?
Yeah, so we're the largest in carbon credits at the moment, which is really land-based. So think about, forestation, farmland, human-induced regeneration. So which is really allowing certain areas of forestry to regrowth and really generate carbon abatement. On the water side, we've actually been working on this for quite a while. Again, this investment has just closed in July of this year, and so we're making substantial progress on the water side, which hopefully by year end will be more publicly available.
Great. So I'd like to invite other panelists. You have questions or comment, please, you could chime in here before we move to Sharon Shen. So let me. I
guess
continue.
The question would be, and I don't mean to be just in the spirit of having a debate here. So sure. The question really is that, on the KKR fund or some of the other funds, is, would KKR have invested in this as part of their regular fund anyway, and did we need an impact fund to do this? So the question, because it's obviously a good investment. It sounds like a very attractive investment. And I know that, like in India, like there was a waste management company where the main KKR fund and the impact fund both invested in the same company. So the question really is that I'm not a stickler for additionality, et cetera, but it'd be interesting to hear as to how does the impact fund and the regular fund kind of think about things differently?
Sure, and that's a great question, because obviously there's a number of different ways to think about it, both from the additionality aspect, as well as from an investor perspective, right? Am I investing in KKR or am I investing in impact, and how does that work? I think from our perspective, there's one is the intention. So for example, we don't view, so the Global Impact Fund was not established to do something different from what KKR has historically done. It's adding on the experience and the industries and the track record that we've already invested in. And so the reason why it's aligned with our global private equity footprint is we're not going to do Latin America. We're not going to do Africa, because these are not areas that we have a track record in and we have teams on the ground. And so we're very much looking at what have we already done that has a sustainability thesis, and what are our capabilities in these areas that could enable us to really drive growth. And then with that, with the intentionality that we spoke about, so on this particular transaction, I think it certainly meets private equity risk return, but it was definitely identified with a lens of looking in this market, which I think generally speaking, and again, this was done in partnership with our Australian private equity team, and the thematic itself on a standalone basis, given the policy considerations and given the other considerations, may or may not have been the key theme, because we have a small fund, we have a small team on the ground. And so I think it's a matter of both, which is we need to have the ability to canvas our own team's regions and capabilities. So in the India example, in Ramkey, one of our team members, Bhuvan, who I'm sure you also know of, has been in several impact communities in India in the past. And we really view that investment as not only a large private equity investment, but also something that we could go in and drive an impact agenda. And so I think that part is something that's different, which is in the cases of absent an impact fund, would we have committed to as rigorous of an ESG standard? I think yes. But would we have also committed to an impact reporting, a quantifiable measurement around the sustainability context, a diversity and inclusion agenda, and some of these other additional aspects, and also committing to reporting that to our investors on an annual basis? I think the answer there would be no.
So GIIN,
that's great.
So I would just add, I think what's really critical here, and I think Sharon's really done a fantastic job articulating this, is that, when TPG and KKR and some of the other funds have launched these impact funds, they've actually bought institutional capital at scale to kind of deal with this issue, which I think is really critical. And I think China has got a similar opportunity. I mean, there are so many, mainstream Chinese, PE funds, and for them to maybe launch a little side impact fund or something like that as an interesting opportunity would be great. And I think what's happened here is that you have institutional capital coming in. It's given the ability for some of these large funds who could not do $100 million deals, $50 million deals, to actually do those deals now, because there's an impact lens and the deals are smaller. But then, like Sharon lastly said, is that you are actually creating these metrics where you're holding management accountable for certain KPIs around the impact space, which you would not otherwise. And I think these are things which, particularly since this is a China-focused discussion, is that some of the large PE funds in China who are focused in China should really actually be thinking about this as to how to set up another side impact fund, which is not sacrificing returns, but thinking about bringing an impact into their investment equation.
That's right. That's right. Just like what you said earlier, that you have the measuring risk and measuring returns, but then now you have another metrics, impact. So regular funds could, just like to learn from KKR and TPG, launching specialized, impact funds alongside with the normal, commercial PE funds. So we actually have time for Sharon Shen to share, your portfolio. And so love to hear what you have done lately. Yeah, your fund has done.
Yeah, so before I jump on the portfolio, that I want to echo on the points that everyone has shared, but just specifically for China, that we have done a lot of work kind of advocating the China investing committee there's actually, Professor, to your point, there's increasing awareness of how do we direct the capital to do good in China as well, and what kind of investors and also what kind of like system that should be in place in order to make sure that the initial intent got to be fulfilled. I think that's also an important criteria that we're adopting in our methodology, is that by putting down IMM, the impact multiple kind of target, that's a commitment to our investors, and that's also a commitment to our portfolio companies. So that's from the execution perspective, that actually also differentiate ourselves in terms of what kind of like entrepreneur that will be more willing to work with us. So to go back on our investment, our most recent investment is as a plant-based protein platform in Asia, started in Hong Kong. And the founder kind of started the business in 10 years ago, first as a social movement called Green Monday movement. The objective is clear, that he wanted to promote.
Wait. So this is so interesting. I have to ask. So Green Monday,
yes,
meaning on Monday you don't eat meat. It's what?
Yes.
What is that? Oh,
yeah. He wanted to promote that less kind of less meat consumption, more vegetarian kind of flexibility, and also
I see. Okay.
More
Green
importantly,
Monday.
the social awareness is that you don't have to convert into a vegetarian to be environmental and the sustainability kind of conscious. You just have to be like aware and putting a bit more effort and a bit more kind of conscious choice. So that started as a social movement called Green Monday, that every Monday like try to eat less meat. And eventually that he converted the business into a kind of integrated platform with proprietary products as a pork products, because that's the main kind of protein consumption in Asian market, while still like being able to deliver kind of executable solutions for all plant-based brands and protein kind of products in Asia. So we have been kind of in close partnership with the founder since a few years ago, has been constantly following the business and helping the business to grow until this year that we were really glad to see that the business has come to the end, come to a stage that will be ready for a typical kind of PE market return investment, and this is time that we come in. And to Professor's point, that what makes a difference, why it cannot be like any other TPG fund or it has to be RISE. In all the cases that we invest, from the investment return perspective, that will be qualified for any other TPG fund. But the difference will be firstly on the size and also on the stage of the company, that we are a bit more flexible. Considering the impact perspective. But the other most important thing is that in this case, that the company is actually not yet, the founder is not really open for financial investor at this point. All he's looking at is strategic investor. And because of our impact angle, and also because of the RISE commitment that he has seen across the different markets, he actually views us as a strategic investor sharing his missions, which is something that he holds the most dearest to himself. And that's also with years of like close partnership we built with him. This is I would say that this is a big difference, and this is a big drive why that we're kind of choosing each other and decided to marry at this point of time.
Oh, that's a very interesting story. So this entrepreneur would not accept commercial capital if you just aim for financial returns, that he's not accepting your money. And unless you're strategic in generating social return. Now, so I know in the U.S., this is probably echoing back to Vikram's earlier earlier stage in terms of the millennials are much more socially conscious. Yeah. So therefore, the vegetarian meat or vegetarian protein business is actually supports a very high valuation in probably some public listed companies. So it looks like socially conscious concepts could generate very high value on the capital market. Vikram, is that right?
I think that's somewhat right, but I mean, I think still investors will still look at the underlying economics. I don't think it'll be naive to think that it's just the social thing that's driving valuation. But I think there are 2-3 points, which is, to the point about, entrepreneurs looking for a certain kind of capital. So the case that I talked about, the TPG Rise case on EverFi, the first case, Tom Davidson, who is the entrepreneur there, comes to our class along with Maya, who is the managing partner at TPG Rise. And he says that, TPG people, the TPG growth folks had been pursuing him to invest in him for like 4 or 5 years. And he kept on saying no. And then when they formed TPG Rise and they said, hey, we're not just financial investors, we actually care about what you're doing, that you're trying to create software that helps reduce sexual and abuse, alcohol abuse, etc., that we really want, that's what we care about. He actually embraced TPG Rise. And so I think what you're finding is that there is that management, CEOs, boards are looking for investors that are aligned with that thing. And so there will be some premium to that. I think we're not completely there. I think particularly in China, I don't think we're there at all. But I think it's more about create. All the Chinese are laughing, but it's, but hopefully we'll try to get there. So
I think that's a great professor.
So we still very much hard-nosed money makers. And that's,
it's amazing. You're not supposed to be a capitalist country, but you're much more hard-nosed.
That's right. That's right. But Karen Shen, mentions this particular. This is probably emerging. This is emerging because founders, particularly founders who not necessarily particularly need capital, but they need people who help them to advance their values. After all, they're doing this to express their own values, and some of the entrepreneurs, their values are creating social value. So I think that's an interesting point. Now,
yeah,
this
I want
is
to make a clarification. There is that it's not just the impact cap that we're having. It's really like the way that we're doing business is that from day one, the measurable independent assessment and including other commitments. It's a discipline. Means that we lay down the framework and we lay down our discipline. That's also our commitment to the LP society and to the entrepreneur. With that discipline in place, that the entrepreneur knows that they can expect that they will first of all at the beginning that we share their mission, and secondly over the course of the investment life and over the course of their kind of business life that we share that commitment, that we made a commitment to continue to support and help to develop their mission. I think that's the most fundamental reason that that to make a difference in front of an entrepreneur is just, it's not because you're called like impact investor, but really like what you're doing there and what kind of boundary you're setting in terms of actions.
That's right. That's right. So for those of you who are also watching this, I know some of you might feel that some funds just using the impact as a tool to raise money, but actually you're not implementing it. So I think that we have some earlier question asking about this. But what we have done today is to show you how serious it is, and so that's why measurement is very important. Third-party measurement is very important. That's why you have done so many things, like Sharon Young has said, that post investment you have to do a lot of things to generate. Otherwise, you cannot answer professor's question. You know, why you? You know, a commercial capital could do this, or why you? So I think that we have to bear in mind that this is a very serious effort, and you have to prove that you are, creating social value. I would like to, use this opportunity to answer, to ask on behalf of some audience, to our panelists to, respond to some questions. Before we talk to a career path, issue, I'm sure a lot of you will be interested in it, but, stay tuned. So we'll answer. So a viewer named Happy. So Happy, we're talking about your question now. So it's about public listing. So the question is, if you're doing impact deal and then you cannot succeed in public listing, then what? You probably linger and have social impact while the company exists, but you cannot exit. So could anyone comment on this? I think this is a very good question. I don't know, maybe Happy, you are also in the industry, you care about exit. So anyone wants to jump in to respond to this about exit of the impact portfolio companies?
Yeah, sure.
Yeah,
yeah, go ahead, Sharon.
I'll give just a quick comment on that. As mentioned earlier, that for us, actually, any impact investment we do from the kind of like investment return and the exit perspective that will have to qualify for like the general kind of TPG investment guidelines and requirements. So exit was building there from day one. So if from the kind of real life execution perspective, that we do help the company to plan for their public listing route as well, and has been actively supporting our portfolio. The important thing is that we view ourselves as a catalyst that help to go through the kind of initial stage that really need the like-minded, the shared mission capitals to help the company to grow to a certain state. But at the end of the day, that the point is that being sustainable and the generating market return is important to attract big institutional capital to bring more focus to generate more impact. That's from the fund perspective. From the company perspective, it's the same. That being able to stand on their own feet and getting more kind of broader source of capital will be important for the company to continue to deliver good to the society. So that doesn't contradict with each other.
And Vikram, you wanted to say?
No, I know. I think Sharon touched on it. I don't need to add anything more.
Okay, all right. So Kevin,
I'll just
Sharon.
Sorry.
So can I go to Kevin, and then maybe Sharon Yang, you can make a now for your speech delay venture. Now I know it's early stage, and you probably are very patient to hold it. But what if this there's a plateau for this company to set up the clinics and to help the speech delay kids? And then it's a cash flow business, but it's not growing exponentially, so it's not going to be listed. So let's assume that's the scenario. So what would you do about it, and what does your LP feel about holding this company for a longer period of time?
Yeah. First thing I want to say is that public listing is one of the exit ways, right? So basically, we earn the capital gains through 3 ways. The first is that we can sell some of our shares to the later phase investors, or we have a merger and acquisition later. Of course, the best way is that everybody knows that public listing is the best. So this is one point. And if the project is not going well, I think it's very common because we are early stage investors. We are doing a lot of small investments. We cannot guarantee that this one gonna be succeed. So I think that our LPs quite aligned with us at this point.
Right. Right. So there's a line of thinking, probably we could share it here. So impact investing is a very interesting area for those people who have the charitable intent. So if the portfolio companies succeed, you have more money to do charity. But if the portfolio companies failed after a few years, then you could regard that as charity donation from the LPs. So maybe that will solve their.
Can I say something there, Jim?
Sure.
Because I've been commenting on the KKR and TPG kind of view of the world, which is it's market-based returns, and we're going to put on impact. But I think there's another massive opportunity here, which is I think where Kevin is coming from, which is he had a foundation, who was a charitable foundation, it seems to be, who's supporting, and who's going from a charity mindset, because KKR and TPG are not coming from a charity mindset. They're coming from a commercial mindset and then bringing impact on. And I think a massive opportunity is coming from a charitable mindset and then bringing impact on and making it more commercial. And I think I think there's just to the audience here, there's a huge opportunity there where, for example, take education. A lot of so much money spent on healthcare, education. There are a few things like that which really target charity. So if you take education, you can set up schools and stuff like that and say, I'm going to write these checks and make it happen. And it can be personal philanthropy or government philanthropy. But what's important is not how many people are going through the school, but what is the outcome of those schools' education? What is the education level? And so if you actually can take those things and say, look, I'll create a commercial enterprise where I'm creating payments and mechanisms or interesting, so they call social impact bonds, for example. We're creating interesting kind of outcomes where you're paying people only when not just kids are going through school, but their education levels are going up. And there's a business model around that. And so what I would strongly encourage is that there's foundations and charities, et cetera, and even government spending is to take some chunk of your money and say, let's put it into a more incentive-based system, more commercially oriented system. It's not about earning market returns and doing IPO or anything else, but it's actually for every dollar that you spend, rather than getting a 10% social return, you can get a 50% social return. So I think that there's a whole whole dimension over here that one should think about.
Yeah. So I would at this particular point, I would like to say I'd like to acknowledge from YouTube live stream a viewer called Bobby asked exactly what Vikram has just answered, which is, what is your advice for NGOs and charity funds? What would you do since they're kind of Bobby Liu. So I didn't read your question, but Professor just answered your question.
Think about this. I'll encourage the audience to go and understand and research this thing called social investment bonds, development investment bonds. It's all about NGOs, about charitable donations. It's about bringing private capital and to take some sort of risk. But the payments are based on outcomes. It's just like creating an incentive system that you're not just getting payment just because you have a budget. You're getting a payment because you actually deliver an outcome. And I think there is a massive opportunity out there for that.
Okay, so Sharon, so you have the last word for this section, then we move to career path. Okay, all right.
Yeah,
please,
I want
Sharon,
to add on that point is that to share another kind of investment we did in China. It's called CD Finance. It's the largest kind of rural financial financing provider in China. Served over millions of rural population in the past years. So it actually first started as a microfinance project, exactly as like people asked and like Professor said. It was supported by the foundation, by the World Bank, and also the China Poverty Elevation Foundation at the beginning for the first 10 years. Over the years that with the foundation support and was like interest-free loans given to the company and building a real kind of deep reach the rural presence in the villages, and especially in the more poor, like poverty-stricken villages. It built a business like over till today is they built a business with over 5,000 people, and we came into the company in 2018 as impact investors. The company today is already was at the scale of serving more than 500,000 people on the yearly basis, and on the profile was from the beginning, more than 80% of people has never got institution financing at the beginning. So a lot of people doesn't even have a bank account and some of them doesn't even have a personal ID card. So that was the kind of stage the company has gone through. Without the foundation's help, without the charitable kind of purpose help, this will never come to the stage that it is today. So to the point that the foundation and charitable purpose fund will have a big kind of impact in this space to help the company to grow to the stage that may be suitable for the impact funds. And our mission is really to continue to support those kind of missions to the level that they will be able to kind of become more sustainable in the way that by themselves and not entirely kind of rely on the social purpose funding.
That's if I could just maybe summarize what we have to talk about the relationship between charity and impact investing, is that it's complementary. So there are different ways of solving different social problems or solving the same social problems, but at the different stages. And when the organizations that they sponsor facing different values. So in your example, Sharon, that it started with the charitable, with the support of the charitable funds and NGOs, but grow at a stage that how to expand there's a business issues will be more suitable to be supported by rights funds. So I think that's one. The other one is what Professor says, that for the NGOs and charitable foundations should experiment how to encourage innovation in business models. So more like put on the commercial hat on their charitable mandate, just like for the charitable fund managers to have the impact hat, looking forward. So that's great. So I think that's a very good section, and I'm very happy that we have this section with the real examples and with the professor's comment. Now, I would like to start the final 15 minutes or so to address what Charlotte from Pepperdine University, she asked, if I want to start a career as an impact investor, what qualities are investment companies looking for? So before that, I would like to have a quick kind of a roundup in terms of where you have been to end up doing impact investment. So could you say a few words to share about your background? Maybe we'll start with Sharon Shen. I know that you used to be a consultant, right? So tell us a little bit about your background. Yeah.
So I actually started off, I was a beneficiary of the Education Foundation to begin with, and started off in the corporate supporting the strategy development for quite a few years, and later moved to a consulting firm. So a real kind of hands-on operation focused consulting firm to focus on solving real life problems, real business issues that the company is facing. That we are the type very hands-on and jump into the problem and get the problem fixed. And over the years that I learned about impact investing through our managing partner in China, that learned about the rights mission, and this is something that really attracts me. So that was kind of reason that I decided to switch career and join TPG.
Great. So corporations, consultants, and then TPG Rights Fund. Okay. So I noticed, Kevin Tong, I noticed you used to work in the medical devices, right? So you're coming from a little bit different angle, a technical angle. So tell us about your background, your career path.
Right, I'm actually pure technical background, doing the research and development work in different MNC companies. So I think at the very beginning I spent 8 years in telecommunication industry. Then I moved to the medical device industry. Then I got bored, basically doing this kind of R&D things. So I went.
You got bored. All right. So, okay, good.
Yeah, but yeah. Then I went to the business school. It's called CIPS in Shanghai, which is a business school in around the world, in Asia, probably. Mm-hmm. Yeah. So and then when I tried, because the interview of the business school interview asked me that what's your aspiration? I just want to say I want to do the early stage investment, probably can have some kind of a social value returns beyond the financial returns. And then I met PD Ventures, actually. I got an interview and I just joined as an internship first, and then I started my career in the PD Venture for like 5 years till now.
Okay, interesting. So corporations, technical background, got bored, MBA, and then so you interviewed. Okay, so that's right. I want to come back. I want to come back to Vikram in terms of how HBS educate the future business leaders in this particular area. But let's hear Sharon Young's story. So what you have been before you turn to the impact investor?
Sure. I think, also just to come back to the question, right? Impact is the intentionality and a focus, but the investing part can take many different forms. So whether it's an early stage, whether it's a social capital, whether it's a charitable, or whether it's private equity, those are, I think I think students, especially as they think about their careers, can think about it from two ways, which is one, which asset class would I like to be in? And then separately, within that asset class and within that focus, is there an impact angle for me to pursue? But back to my side, I actually, I started out at, I was in banking for 2 years in New York after graduation, and then started at KKR in 2009, and was with the firm for a long time. But the turning point, I think, for me personally was motherhood. And after I had my first child, I became vegetarian. After I had my second child, I actually decided to take a break from KKR, given the I'm sure the discussions that many of the ladies or even the men now would have. I'm on the older end of the millennial. I can still classify myself as a millennial, but at the tail end of it. But a lot of the thinking, whether it's around work-life balance and family obligations, and also animal rights and carbon and climate change. After my second child, I actually decided to take a break and pursue some of those opportunities, and worked at explored a number of nonprofits, and also explored potentially going back to school. And it was at that point where, KKR also started to explore the idea of impact investing. And from my perspective, it was really a clear evaluation of, as a personal decision, where would I drive the most meaningful impact? Is it going to be me in KKR? Is it going to be me in a nonprofit? Where would I be able to actually drive that? I'm not wealthy to have a family office to do some of the things that Professor Gandhi has mentioned. And so is there another way and in another platform that I can actually drive some of these missions and help shape that? And so, I was raised my hand to join in on the impact effort at KKR, and obviously we're super excited to be leading this.
Yeah. So Sharon, we wish you are extremely successful in your career. So in your future family office, you will do what Professor Gandhi has advised.
I'm sure.
So back to Professor Gandhi. So what have seen in terms of young people's interest in impact investing from your vantage point of Harvard Business School?
Yeah. So from a Harvard Business School perspective, our kind of mission is that we educate leaders who make a difference in the world. And in fact, when I got involved with HBS 4 or 5 years ago, it was this actual thing, which is that, how can we bring in impact and ESG and other aspects into our curriculum? And I said, like maybe as a first step, we just create a separate course on that, which is what I do. But But I think the intent is, in my view, that hopefully my course is completely redundant 5 to 10 years from now. I mean, it shouldn't be a separate thing. It should be like every investment and business decision involves an ESG analysis and impact analysis. I will say for people who are interested in this area and want to get into it, ultimately this is not some esoteric area. If it's impact investing, keep in mind investing is the key. So it's learning the basics of finance, investing. It's learning the basics of running a business. Like Kevin said, he was in the medical devices business. He spent time on that. Both the Sharons have done a lot of stuff which has nothing to do with impact, but like core kind of investing. So, but the key thing is having that like psyche at the back of your mind that everything that I do has got to make a difference in this world, has got to have an impact in some shape or form. So while I can run spreadsheets and when I can run present values and I can do all this other stuff, like how is it moving the needle in this world? And I would just encourage people who are thinking about this area that don't get carried away that I just want to do impact. You've got to have the basic skills. You've got to have the basic skills, otherwise you won't be successful. But as you're developing those basic skills, keep the moral compass high. And that's what we're trying to kind of really get through at HBS now.
That's great. So, Professor, we really want to be neutral. We don't want to run this as a Harvard Business School thing. So, are there other schools that you would also recommend?
Yeah, no, I think all this. I mean, I think, as I said, we have actually at Kellogg. Kellogg has been hosting a session every June where all the professors from all the different business schools come together and we talk about what's going on in this area. So I would say it's nothing. It's not. I'm just talking about HBS because that's what I know. But the fact of the matter is that all business schools are kind of thinking about this, not because of anything else, but it's the right. It's not just, and it's not even just the right thing to do. It's what's actually has to happen from a good business standpoint. So it's the right thing to do, which is the values, but it's also the right thing to do because of value. So this whole issue of values in terms of what kind of moral people are we trying to grow, but in the long term, if you want to create value for your personal life and for your business or for your whatever, you got to think about these things. So this is a thing that's happening. This is a pretty much getting more and more. It gets back to the millennial issue that I talked about before, the UN Sustainable Goals. It's like becoming a Northern Star, which is fantastic.
That's great. That's great. So we have a time to have one last question, and then we probably will hear your concluding remarks. So what will be your advice towards the young generations of Chinese entrepreneurs in China to learn and practice impact investing? So these Chinese, but in the US, so not directly working in China for this, but I guess there are many venues. So how do they get involved for young Chinese entrepreneurs in the United States? Anyone wants to answer this question?
I could take a shot at it. So I think, when entrepreneurs get involved, and it's whether it be Chinese, and I've actually had questions like this from Latin American entrepreneurs, in the US looking down to Brazil or Colombia or whatever, and Indian entrepreneurs, is that you should build a business and go with your passion, whatever it may be. But where the impact opportunity is let me give you a thing. In most countries, whether it be the US or whichever country you come from, and this clearly applies in China too, you have the wealthy and the middle class, you have the seriously poor, and you have this massive aspiring middle class. And the aspiring middle class, if you can actually, because it's very hard to create business models on the truly bottom of the pyramid, that's where the nonprofits and all that kind of focus, and the government focuses. The wealthy, most private capital is focused on the wealthy because that's where the biggest wallet is. And it's really in the aspiring middle class is where the biggest opportunity is. If you do interesting business models, interesting innovations, interesting ideas. And that's where, whether it be China or elsewhere, I would encourage you to think about it. Because if you really want to make a difference in this world, of all the 7 billion people, there are 3 billion people in that bracket or more. maybe more, 4 billion people. And so it's a massive market which is completely underserved. And that's where building business models around that is actually a huge opportunity.
Okay, great. So Sharon and Kevin, any advice for young people in the U.S. How they can get involved in or learn about impact investing?
I think the most important thing is think about your angle, why it's you, that where are the areas that's in your aspiration that you want to bring value to the society, because it all goes back on individual kind of strengths and the edge. But from like getting started, my recommendation will be get connected with the community. Right now it's not a big community per se, but which also makes it like a lot more close and well connected. If you're really kind of interested in exploring this in China and then get connected, and there will be a lot of opportunities that for you to think about where will be the right place for you.
Yeah, okay. I would really agree with that as well. It always starts with what problem are you addressing, and how and what impact are you trying to deliver? And from that lens, whether it's the audience, as Professor Gandhi has mentioned, you're serving your customers, are they what demographic they fall in? It then stems naturally after you figure out what question is trying to be resolved. And the other angle is we always try to be or need to be locally conscious, because the context in the US is going to be vastly different than the context in emerging markets, and even in China, and even within China. China is a huge market. The individual local context within the education system, within the healthcare systems, there are all a lot of nuances which from a single lens and impact investing can often feel like there is a more US-centric, ideology-driven lens. I think we need to also ensure that it's locally applicable and adaptable, and obviously viewing it from actually the question and the problems that are trying to be resolved. And then I think everything else falls from there.
Okay, great. So any good discussion needs to come to an end, and this is the time to end our own panel. But before that, I would like to hear from each of the panelists your very short one-sentence concluding remark. And imagine you stare at our panel organizer, Nikki. And so we are talking to young students in both sides of the Pacific, and talking to them, and your concluding remarks will be what? Okay, so let's probably start with Kevin. Kevin, what will be your concluding remark to young people in both, young Chinese people, I guess, in this particular audience, in both the US and in China?
I think we are on the same planet, so let's do something good, for this world, for this society.
Great. Sharon Yang, your concluding remark?
Sure. I think it's always great to be passionate, and so find your mission, and find what it is that drives you. And there's a lot of aligning stars at the moment, right? The EU just pushed out the Green New Deal. President Xi in China is just committed to decarbonization goals and targets. Many parts of the world, it does feel like it's at an inflection point of both awareness and commitment, and both from a policy perspective and also from a capital perspective. So I think it's a great time for young people to really start thinking seriously, and to find it hopefully at the right time to pursue this.
Okay, so Professor, your remark will end this panel.
Okay, sure. So as I think Kevin had an interesting thing that the world is still a good place to live. So if you are like Chinese living in the US and you feel a little disillusioned, don't worry about it. This is a temporary thing. But I think the fact is that if you have an opportunity, if you are a Chinese of origin and know China, and you have a US connection and are comfortable with the US, the world is your oyster. I mean, you are part of you are part of the two largest economies, which will be the largest economies in your lifetime. So take advantage of the fact that you have this opportunity between those two economies, and it's kind of limitless as to what you could do.
Great. So thank you all for our wonderful panelists, and thank you, Nikki, for organizing this. Also, thank for all the people who made this panel possible. I might forget some names, but Nikki and Lulu are the two people come to mind, maybe Eric as well. And thank for all the audience and for those who asked very good questions. I'm sorry, I cannot ask all the questions you asked, but this is a wonderful, wonderful audience. So thank you very much. Until next time, bye.